What's going on, you guys? Welcome back to my channel, and today we're going to be going over my public TFSA portfolio. In this portfolio, I started with around 2K. I'm hoping to get to about 50K after about 3 years. And just doing some simple math right now, I'm depositing about $200 a week. So that means I'm going to deposit a total of roughly $10,000 each year. So over the first 3 years, I'll be depositing a total of $30,000 and trying to grow the, initial investment of $32,000 plus the $2,000 initially that I deposited all the way to $50,000, meaning I need a rough gain of around $18,000 on my investments. So if you guys are interested in following along this journey, remember to subscribe down below as I'll be releasing a new video on this portfolio every single Monday. If you guys are interested in real-time updates on my portfolios, I've got a link to my Patreon group down below. I've only got a few slots left in the Fire 40 as well as the Fire 30. After that, if you want the same perks, the price is going to go up by a little bit. However, there's no pressure to join those groups. It's just that I'll be disclosing my buys and sells in my Wealthsimple trade portfolio as well as my private question portfolio if you're interested in that, and I do that on a daily basis whenever I make buys and sells. I also provide little snippets of information on my personal opinion on what's going on in the market, things like technical analysis on the indices and where I think things could be going based on price movement as well as volume movement. Now to recap the strategy I have for this portfolio, basically I'll be having a mixture of growth stocks as well as dividend growth stocks. And I would say the rough portfolio split I'm hoping to go for is around 50-50. Right now, I'm just building out the portfolio, so I'm trying to get all the percentages correct, but eventually we'll probably get there after, let's say, 4 to 5 weeks. And I'm going to continue improving the spreadsheet. And I know a lot of you guys have asked about getting a template for the spreadsheet, but for the time being, I'm not yet confident that the spreadsheet's just good enough for you guys to use. So I'll be testing it out over the couple of weeks, and once I feel like it's ready to release, I might have a public one come out. I'm still not sure what I'm doing there yet, but stay tuned for that. Now, without wasting any more time, let's go over what I bought this week in the portfolio. So this past week, I did all my buying on March 18th. The first stock that I bought was Air Canada. I bought an extra share at a cost basis of $28.50. And Air Canada still continued to drop down on Friday, so I'll probably buy more a little bit next week. And the reason why I'm buying Air Canada right now, even though it's kind of run up in the past couple of months, is that I believe there's still more upside because the economy is going to recover and the stock market is forward looking. So I believe that there will be more traction for Air Canada in terms of the investor base, and I'm hoping to capture that. After, I think, when Air Canada returns to its previous all-time highs, I'm not sure if I'll keep it around in the portfolio long term, but I think it's definitely a good recovery play. I know in the past I said that airlines are fairly low margin and they're not really something I'm interested in investing in, but I see Air Canada more of like a swing play right now, thinking that it could recover to pandemic levels over the next couple of years, if not this later on this year. The second stock that I bought this week was WellHealth Technologies. I bought a total of 3 shares for an average cost of $7.95. And currently, with a position of WellHealth in my portfolio, it's relatively small in this TFSA portfolio. If you guys have been following my journey, you'll know that my personal account on Wealthsimple Trade has a fairly sizable portion in WellHealth Technologies. And honestly, I love how the company is run by the former management team of TO Networks. And the fact that that management team has had experience running a company and exiting the company, and they're on their second one, gives me as a shareholder confidence that they're able to do the same thing with WellHealth Technologies. In addition to that, management also recently bought into their latest financing round at $9.80, which is actually above the stock price the day before they made that announcement. So this kind of gives me a signal that management is fully in line with the company and they believe that the stock price of $9.80 still has more upside. And the fact that I bought at $7.95, this is a discount from $9.80 of I think roughly maybe 20%. So I'm paying 20% less than what management got their shares for in the previous round of financing. Currently, the telemedicine stocks are in a bit of a lull just because there's been such a huge run up in 2020 that there's a lot of people with vested interest to sell out right now because they probably got in around $2 or $3 or even $4 a share, and they're sitting on a nice gain of anywhere from 100 to 300%. So right now I see WellHealth in a consolidation period. So there's going to be people looking to sell around this price, and there's going to be people looking to buy. However, once all the sellers dry up, we should see new all-time highs. That's my personal opinion, at least. The third and final stock that I bought this week was Algonquin Power Corp, and I bought 2 shares at a cost basis of $19.80. Algonquin Power Corp is a pretty solid utilities company, and they're branching out into renewable energies. Recently, the stock got hit because of the whole fiasco in Texas where they had that huge freeze over. And Algonquin does have operations in Texas. And if you look at the stock chart, it was trading around $22 per share earlier in February. And once that storm hit, you can see Algonquin, they sold off because of the damage that was probably done to their properties. However, I think Algonquin is going to be able to build back up, and in the long run, this is what I'm buying the stock for. I believe it'll be worth more in the future, and in the meantime, I don't mind collecting a decent dividend. The current dividend that they pay out per share, according to my spreadsheet, is 4.02%, and the company has been known to grow the dividend every single year for the past 10 years. So I think this is a nice dividend growth play for my portfolio, and I plan to hold it for the long term, even beyond this $2,000 to $50,000 challenge. Now let's jump over to my spreadsheet and just look at a few metrics that are being displayed there, and I'll talk over a bit more about the portfolio, how its performance is, and what I plan to do this coming week. So we're back here on the public TFSA portfolio tracker. And last time I did mention that I had a few stocks in this portfolio before it actually began, and 2 of these stocks were Enghouse and Kinaxis. And I guess just for the purposes of this video, I'll actually put the book value price that which I bought it for, or the cost per share, based on the March 16th price, which is when I started this series. So I'll go here into the Wealthsimple transactions, and here you can see all the starting cost per share for each of my positions. So if we go over to Kinaxis, we just do the 5-day chart. Let's look for March 16th, just when the market closed around 4:30 or 4 o'clock. So close at 151.65 for Kinaxis. So let's go back to the portfolio tracker. So we're going to type in 151.65 and make that our new cost per share. Then we're going to do the same thing for Enghouse here. So it's 61.87. Now this should reflect what the value of these stocks were when I started this challenge. So this will give you a more of a fair picture of when we started this and what the actual profit and loss is on those positions as of the date that we started this challenge. So as of last Friday, you can see the percentage gain of this portfolio is around negative 1.19%. If we look at the performance of the SPY, which is the ETF that mirrors S&P 500, we can see the performance from the 6th, which is around there, and where it ended on the 19th. The whole S&P 500 was down 1.61%. So I guess so far this portfolio has somewhat outperformed the S&P 500. Perhaps I will later on code in just a way to track the S&P 500 and its performance over time. Although it might not be exactly fair because I'm depositing $200 each month, so it's not exactly the best comparison, so maybe I'll actually withhold from that. If you guys have any suggestions of how I can actually track this portfolio against some sort of index, then I'm all ears. Now, when we're looking at the positions in this portfolio, what I'm planning to buy next week, one of them I really want to buy more of is Power Corp Canada. And the reason why I want to buy more of Power Corporation of Canada is because they recently released their earnings reports, and the net asset value per share of Power Corp Canada, according to the report, was around $41.50. However, the current price of the stock is $33.48. So based on the net asset value versus the current price of the stock, it looks like Power Corp Canada is actually undervalued. And it's undervalued by a fairly significant amount, almost 20%. Looking at the rest of this portfolio's performance, we can see that Well Health Technologies was down. Maybe I should actually change this cost basis to reflect when we started as well, because Well Health was in this portfolio before we started the challenge. So let me go do that first. Okay, so now that I've changed Well Health to actually reflect the price of the shares when we started this challenge on March 16th, now the percentage gain that this portfolio, well, the percentage loss, has gone down even more to 0.62%. So looking at all the stocks that I have right now, we can see that the ones that are down the most are Air Canada, Algonquin Power Corp Utilities, as well as Kinaxis. So I think that this coming week, I'll probably look to add some more Air Canada just because this is a short-term recovery play that I'm planning to swing trade. I guess the swing trade's probably going to be over a few months or even half a year, but I plan to buy into Air Canada as long as it's below its previous all-time highs and potentially start selling out when it gets to like the $40 or $50 level. For Algonquin Power Corp, I actually will continue buying more of this, even though I bought it last week, as I do believe this is a pretty solid dividend-paying stock. They've been increasing their dividend for the past 10 years, and previously, just the last raise was a 10% increase. Kinaxis is another stock that I'm interested in buying, as this stock has been on quite a dip. It fell from highs of around 217, or actually 223, so it's down about 33.7% from its previous all-time highs. This company did report earnings on this date somewhere around here, and the stock tanked because the growth story didn't seem as promising as it did in previous quarters. But nonetheless, this company is still growing. They've got revenues of $191.5 million USD as of 2019, and I believe that grew to somewhere around $250 million. Don't quote me on that, but this is what I remember from reading the earnings report. The company is profitable according to Google Finance. They have a P ratio of 245, meaning that at least the company is turning a profit on their operations instead of losing money like most growth companies. The last thing I want to do here is give you an idea of all the different tabs and how this spreadsheet works. So if you want to code your own spreadsheet, then you can do so as well. So the third tab in this list actually shows you all the equity symbols, the exchange, the currency, the asset type, the sector, the risk, which is a section I'm looking to add, which I haven't yet done, and the current price of each share. And this is sort of just like a database of all the different stocks that I own. So each stock that I buy that's new and not in this portfolio, I'll add another line. Then we come over to all the transactions that I have. So this sheet actually tracks all the transactions that I make based on the date, the equity symbol, the exchange, company name, currency, its asset, the quantity, the cost per share, the total cost, and whether I'm buying or selling. And there's different options here, like if it's a starting position, buy, dividend, sell, deposit, withdraw. And from this sheet here, this is basically the summary where it actually takes data from this Wealthsimple transaction portfolio, summarizes it here, and gives me an idea of how the portfolio is performing. So you can see here I have cost per share, and there's a huge long formula which I take to determine the cost per share of each position. Then there's a current price, which is the Google Finance price. Then we've got the book value, the market value. Then we have profit and loss, percentage return. Then there's this large formula that shows the 1-year chart. So you can take a glance at this portfolio and just understand each different stock and how it's moving over the past 52 weeks. It also pulls the dividend yield, the yearly income from the dividend, the percentage of the portfolio that this position makes up, and the P ratio if that stock has a P ratio. Anyways, I hope you guys enjoyed this video, and let me know what your thoughts are down below on my portfolio. Are there any other stocks that you like to see added into the portfolio? Not penny stocks, but high growth stocks as well as dividend growth stocks. I'm looking for relatively more stable companies that are trading in the billion-dollar valuation range if they're a high growth company, or if they're a dividend paying company, at least they're paying a steady dividend for the past 10 years or so. I've got 2 other videos right here. If you missed my first episode on this portfolio, it's right up here on the right side, or I guess on the left side of your screen. And I've got another video about a high growth stock right up here. If you're there, I'll see you there. If not, keep up the grind and have a great day.